The Reserve Bank has waded into the climate debate with 60 other central banks issuing a stark warning on climate change. Slash emissions to zero or risk a 25% fall in global GDP by the end of the century. Businesses and investors are upping pressure on the federal government to commit to net zero emissions by 2050. But the government has defended its position as meeting the Paris commitment. Rachel Papazzoni has the story.
Lighting up Australia's biggest city, today flicking the switch on 100% renewable electricity.
We'll be reducing our emissions by 20,000 tonnes. It's equivalent of 8,000 local households.
And according to the world's top bankers, cutting carbon is not just about pollution.
The potential economic costs and financial risks that we see could be catastrophic.
The Reserve Bank of Australia is one of 66 central banks, including the Bank of England, warning there could be a catastrophic 25% plunge in global GDP by the end of this century if policymakers don't sign up to aggressive cuts to emissions. A report commissioned by the banks says even achieving net zero emissions by 2070 will see a 4% cut to global GDP.
If we act now, there is a good chance that we might keep global warming to well below 2 degrees.
Last week, the Australia Energy Council, representing business and supported by state governments, appealed to the federal government to set a target of zero emissions by 2050. The Energy Minister Angus Taylor was not available for an interview, but in a statement from his office told the ABC the government has a very clear 2030 emissions reduction target and a joint global commitment through the Paris Agreement to deliver net zero emissions in the second half of the century. And last week, the government rejected an appeal from Labor to end the climate wars with bipartisan targets on emissions. While the political scrap continues, some of the country's biggest institutions say government policy is crucial to guiding investment.
We would like to see more certainty in terms of federal government policy. And to be very clear why that's important for a fund like HESTA is government is an enabler of the environment that we invest in.
HESTA is cutting carbon emissions in its $52 billion investment portfolio by 33% by the end of this decade and has pledged to reach net zero by 2050.
And it really is related to this issue of managing the risks of climate change and ensuring that we're in a position to continue to deliver great returns for our members over the long term.
It says it wants to work with heavy emitters like Australia's largest and oldest energy provider, AGL. The power company says it's now linking executive bonuses to emissions targets.
It's a good way for our shareholders to see that we're responding to what they're asking for.
But it's yet to call time on its coal-fired power plants, the last of which isn't due to close until 2048.
We will see that our emissions intensity will come down over time, even as for some time to come, coal-fired will remain the backbone of what we do.
And energy stocks are having a tough time. Analysis by the Australia Institute reveals it was the worst performing sector among the top 300 companies listed on the ASX in the last decade.
Fossil fuel companies not only negatively impact the climate, but also negatively impact the savings of most Australians through their superannuation.
Richie Merzian says investors are expecting tougher policy action, and the government's plans to use leftover credits from the Kyoto Protocol is sending the wrong message.
The federal government's finding itself with few friends when it comes to its current position around climate change.
Hitting zero emissions within 3 decades is proving politically hard, but supporters say it's a win-win.
There's so much evidence there now to show that that would be in the interests of us, not only environmentally but also economically.
Keeping the lights on and the economy growing, a difficult target for policymakers.